mortgage in 2023. Hey, everyone, it's another episode of my podcast, Canadian Mortgage Weekly. I could really use your help. Share, like, and comment below to help me get this information out to everyone you know. So, before I get into these pros and cons of refinancing, love to be able to just share with you that this is episode 121. Been doing this for a couple of years now. And a lot of my clients actually tell me that they really love these episodes and that it really helps them with their mortgage process. And I'm going to really look forward to sharing these pros and cons of refinancing with you today. And if you've ever refinanced your mortgage, what do you think the pros and cons are? Let me know in the chat below. And if you're looking to refinance your mortgage, you can actually book an appointment with me directly into my calendar in the calendar link below as well. I can service mortgages all across Ontario and looking forward to working with you today. So let's look at the pros and cons of refinancing. I got 4 pros and I got 4 cons, so total of 8. I hope I get everything here today to be able to share with you all. So what's the first pro of refinancing your mortgage? Lower monthly payments. This is especially true if you're going from a high interest mortgage into a lower interest mortgage. Just by doing that, you will see that a lower interest rate can reduce your lower monthly mortgage payments, which is pretty amazing. What about if you were to take high interest credit card debt and put that into your mortgage as well? That would actually also help reduce your overall monthly payments because you'd be putting less money into your payments and still paying off your debts. A lot of folks do put in their car loans as well. A lot of car loans right now are approaching 10%. And if you've had poor credit in the past, you may have a car loan of 20 or 25%. And putting that into your mortgage can really assist in lowering your monthly payments. And those lower monthly payments can increase your cash flow. And increasing your cash flow can actually give you that benefit of taking that extra cash flow and putting it right back on your principal as a prepayment, which can help reduce further interest costs in the long term. So that brings me to pro number 2, reducing overall interest costs. Lower interest rate does reduce the amount of interest that you pay over the life of the loan, whether that is changing from a high interest mortgage to a lower interest mortgage or by simply consolidating your high interest debt into your mortgage. You may have sometimes a higher monthly payment overall because you're actually paying down the loan, but sometimes when you're doing monthly minimum payments on your lines of credit and credit cards, you're typically just paying the interest, and those payments will continue for so long that the total amount of dollars going out will actually be higher in that way than putting it into your mortgage. All right, let's look at a con. What's one of the cons of refinancing your mortgage? That would be closing costs. Sometimes what you can see is that when you refinance your mortgage, you will have closing costs with refinancing that can be significant. These involve appraisal fees, title search fees, legal fees, and in some cases, the lenders charge, especially if you have really bad credit, loan origination fees. Those types of mortgages, all refinancing has those costs, and sometimes lenders will pay for those costs if you have great credit and you have a great profile. Talk to me if you are looking for some promotions like that. There are some lenders that'll pay for closing costs, title search, and appraisal fees, and no loan origination fees. Let's look at another con of refinancing your mortgage, and that would be long-term commitment. If you refinance your mortgage today, you may be asked to enter into a 3, 5, or 10-year commitment with that lender. And breaking that commitment within that time frame in the future could put you in a situation where you may not be able to essentially get away from that lender unless you sell your home. Those mortgages are really few and far between. However, they are out there, and a lot of them do have lower interest rates in exchange for that high commitment. All right, let's look at a pro. Pro number three would be accessing your equity. Say if your mortgage balance is now $200,000 because you purchased your home years ago, you can actually, and when your home value is $500,000, you can actually increase that difference of $300,000 in equity through refinancing. And some people use this equity to buy a second property, like a rental property or vacation home. Some people use that equity to pay down their high interest debt. And some people use that equity to go on a vacation and buy a new car. Whatever your priorities are, the lenders love it because you're increasing your loan size. And lenders always love it when you increase your loan size. Let's look at another con here. Con would be an impact to your credit score. And the way this works, for example, is if you refinance a mortgage and the lender actually requires you to close a credit card and a line of credit in exchange for taking that mortgage, and they are going to pay off that balance in full, then if you close that account, it may have a significant amount of positive history on your credit bureau, which could essentially be deleted once your refinance closes. And that can result in a temporary dip in your credit score. There are ways to avoid this, and I can help you with that. Let's look at another con. All right, there's an interest rate risk. For example, interest rates could rise after refinancing, and then your monthly payments could increase, and that could essentially negate the benefits of refinancing. So an example would be if you took a mortgage out 2 years ago and fixed it at 1.9%, but then you go to break that mortgage today and refinance at today's fixed rates, which are around 4 and 5%, you're paying a much higher interest cost for that money. And that could result in a higher interest payment. And that could negate the benefits of refinancing. However, if you look at combining high interest credit card debt, high interest lines of credit debt, high interest loans for cars or personal loans, even though you're paying the higher interest costs, because of those other loans that you have out there, you could actually benefit still from refinancing by having higher cash flow each month and by essentially reducing your overall interest costs. But that is a risk. So if you are looking at refinancing and you want to really compare what is best for you, contact me in the link below, schedule an appointment, and we can take a look at that together. All right, the last pro and con, this is a pro number 4, change in loan type. Sometimes you're stuck in a loan type which is not right for you anymore. A lot of folks did take a adjustable rate or variable rate mortgage a few years ago. Maybe that's not right for you today with the rates being so much higher. As a matter of fact, as of today, fixed rates are lower than adjustable and variable rate mortgages. So by changing simply the loan type when you refinance, that would benefit you, and that would be definitely a pro when you finish and complete your refinance of your mortgage. What do you guys think? Do you guys agree with my list of pros and cons for refinancing a mortgage? I'm interested to hear your comments below. And as we continue on here, I'm going to show you here some illustrations. For example, the purchase illustration I'm showing on my screen shows a purchase price of $500,000 at today's rates, and it shows your monthly payment $26.79 for a $500,000 home. If you were to refinance and take out $720,000, you'd be looking at a monthly payment of $39.50. All right, let's look at what we have here on the Canadian bond yield. I know that I track the Canadian bond yield on Canadian Mortgage Weekly here, and we have seen the bond yield actually decreasing, trending down here. And because of that, we've seen 5-year fixed rates trend down. That's been a huge relief for my clients that are looking for a fixed interest rate. Do you guys think that the Canadian bond yield will continue to drop here? And if so, we will see further decline in interest rates for the fixed rates. I know that the Bank of Canada has been increasing variable rates, and that's a totally different ballgame, and we'll get into that in a moment here. Looking at the inflation rate for Canada, we're looking at a 6.3 inflation rate. So the Bank of Canada's interest rate increases are slowly working to erode the high inflation rate. We're looking at a 6.3%, still very high. A lot of work to do. We'll see if the Bank of Canada can bring that inflation down to 2. All right, the American inflation rate, as we follow Canada, Canada follows the American economy quite closely. We're looking at a 6.5% inflation rate for December of 2022. And as we saw yesterday, the Fed did increase rates by 25 basis points again to combat this number. It's going to be interesting to see what happens on March 8th when the Bank of Canada meets again. Let's take a look at the 𝗖𝗄 rate. Now, the 𝗖𝗄 rate is a little different. I follow this to be able to price in and determine whether or not a variable rate mortgage is competitive in the market. Right now, it's showing me that it is not. Taking a variable rate today is not very competitive as it was 2 years ago. And that's the variance to prime is under 2%, with the 𝗖𝗄 rate being at 5.01. However, the 𝗖𝗄 rate has been falling in 2023 by this curve here. And I'm interested to see if it continues falling and trending down. That could be a sign to come of what's happening with variable rates in the future. Not quite yet, but could be a sign to come. All right, looking at the Canada's prime rate. As you see here for 2020 and 2021 and into the early 2022, we had a stable prime rate of 2.45%. Now, as you see, the prime rate has gone up quite considerably over 2022, now sitting at 6.7% as of today. Do you guys think the prime rate will continue to go up? I really hope not. For folks in variable rate mortgages, this can be quite concerning. All right, looking at the next Bank of Canada announcement, that's on March 8th. What I'll be doing is I'll be doing a pre-rate show here on my podcast where we look at the prime rate and the Bank of Canada rate announcement and the news leading up to the announcement with a full reveal at 10 a.m. Join me for a live pre-rate show. And the last rate announcement was an increase of 25 basis points. What do you guys think will happen on March 8th? Will rates go up again? Let me know. And average national house price. I follow this to help all my homeowners determine whether or not house prices are rising. As you see, the long term shows that prices are rising. However, we did see a decrease of 1% in December of 2022. Currently sitting at $626,318. Prices have decreased almost 30% from the peak. And when I say that, I'm asking all the buyers out there that have been waiting for prices to drop, where are you? I know that we were talking a couple of years ago and you've told me that prices are too high and we're waiting for prices to drop 20-30%. Well, that time is now. And, I don't see any of those folks coming out of the woodworks. So perhaps it's the high interest costs scaring them off. However, interest costs are temporary. What you pay for the house is permanent. So, buy a house today and you might be able to actually refinance that loan down the road once rates cool off. Thanks for watching another episode of Canadian Mortgage Weekly. My name is Joe Bladek. I'm a local Ontario mortgage broker helping Ontario residents get the best mortgage they can. We meet over Zoom, we meet over WhatsApp, whatever you prefer, and we can get your mortgage completed virtually. And I have access to all the lenders in Canada and looking forward to working with you to set up your mortgage today. With that, I appreciate you joining in. I would love it if you can share and like and comment on this video. Getting this information out to your friends and family could benefit them and definitely gives me a positive impact, because doing these episodes, I really try to get this information out and help all homeowners in Canada get the right mortgage for them. So this has been another episode of Canadian Mortgage Weekly. We'll see you next week on Thursday at 11.